Well, good afternoon. It's just gone noon, and we are with our experts from Jaltech, Jonty and Gaurav Nair, who are going to be taking us through the latest in the crypto markets. A tough job you guys have got today. Looking back at the crypto numbers, Bitcoin's up 20% since its low in June, but we're still down about half year on year. So there is, I suppose, a fair amount of concern amongst investors in crypto. And what I'm hoping that we can hear today is that the long-term case has not been destroyed, as some people considered it might have been. And Gaurav, I like this graph, this chart that we've got here, and we're going to start with that in just a moment. But before we go there, as my colleague Stuart Lohman makes sure that the tech is all right. Stu, do you want to just make sure everyone can actually hear us?
Excellent, thanks, Alec, and welcome all. To those new to the webinar, there's a control panel on the right-hand side of your screen. If you can give us a high five, little high five button there. If you can see Jonty, Gaurav, and Alec on screen with the little presentation slide underneath. If you can give us a high five and hear my voice, yeah, there we go. I've got high fives coming through. That's lovely to see. We'd just like to keep the webinar conversational. There's a question mark on that same control panel. If you can please put your questions in there as we go through the webinar, and Alec will pick them up and pass them on. But all good, Alec, this side.
Brilliant. Thanks, Stu, and thanks for keeping an eye on the tech to make sure that it all goes through. We've had our challenges, given that we are South Africans, and we do, that means we're exposed to Eskom. But Gaurav, I'm having a look at this chart, this first slide that you've got here, and thank you for mercifully keeping the slides short so we can make this as interactive as possible. And the thing that worries me is that we've got Meta and Spotify in our portfolio, and crypto as well. Thankfully, not too big a stake in the three of them, but we feel the pain. Maybe you can just take us through this and what you are actually sharing the oversight on.
Sure. Look, Alec, I mean, yeah, you're right. We're all feeling the pain. And the question is, what is the cause of this pain? And the picture we have here is to show that cryptocurrency, it's not something unique to cryptocurrency. It's not like the Bitcoin blockchain failed or something like that, or a new technology that's better than blockchain was invented and is now replacing it. What's really affecting this space are the macro drivers, as you often talk about, Alec. US inflation, and hence the Fed's reaction to that, interest rate hikes, the invasion of Ukraine, and what that's done to energy markets, what that's done to food markets, etc. And so investors have reacted by selling off the highest risk assets. And tech companies, they seem to have most of their earnings relatively in the future. And that's why they have their sell-off. And cryptocurrencies, it's a very new technology. And a lot of people expect the promise of cryptocurrencies to be, again, in the future. And so as investors rebalance their portfolios, they move more into interest-bearing and lower risk assets. Cryptocurrencies have actually suffered for that reason, just like these tech stocks. It hasn't been something intrinsic to crypto itself.
I suppose the good news is that since the middle of June, we've seen these risk assets or riskier assets make quite a comeback, crypto itself. Jonty, from your side, every morning I get up at the crack of dawn and I tell people about the latest Jaltech basket. And it's been very encouraging to see that it's been lifting. It's a day, because I get the Bitcoin price, which we also talk about in our morning briefing, but the Jaltech price, obviously you don't reprice it at 5 a.m. So I've got from the previous day, but it does seem to be moving in the right direction. I think 2 days ago, on Friday, we had the highest point in some months. Is that just a reaction to this moving off the bottom?
Well, definitely a reaction to moving off the bottom. But as Gaurav was saying, if you look at your risky assets, as soon as there's a hiccup with interest rates going up, and inflation's numbers going up, there's a sell-off. And the opposite is now happening in the market, where there's a potential that the Fed might even reduce interest rates, like I think like China have recently done. And when you have that positive market sentiment, the first thing to jump is your risky investments, and that's what we're seeing in the crypto market. You know, our basket alone in the last 30 days has done really well. But if you look at its all-time high in November to what it is today, there's a significant sell-off. So one would say that if you're a cash-heavy investor, a smart investor, you're looking at these kind of opportunities to enter into the market. And we saw that initially in January and February, when the prices came down at a fast rate. Those type of investors jumped at the opportunity, but no one is really sure where the bottom is. But yeah, it's looking like things are definitely turning in the right direction at the moment.
I'd like to explore that a little more before we move on to the other graphs, and then pull in the questions. And by the way, if you've joined a little late, if you have a look on your control panel and there's a question mark, to pose a question, just click on that. I don't identify you by your full name, in other words, only your first name. So you can be quite happy that there will be anonymity if you happen to be a huge investor and you don't want SARS to know your surname. Don't worry about that. Only your first name will be disclosed here. But around the time that all the markets were just getting smashed, middle of June, where it appears as though we hit the bottom there, because certainly NASDAQ has now gone back into bull market territory, is more than 20% higher than where it was in mid-June. So technically, there has been a very strong turnaround there. At the time, there were discussions or views coming out of Silicon Valley that if Bitcoin can hold $20,000, technically it would be a very, very good signal. And it managed to do that. It managed to bounce off $20,000 all the time. Now it's looking at over $24,000, so a good 20% bounce. Is that something that you guys look at, Gaurav, the technical analysis, when you're putting together your basket and monitoring it?
Sure. Well, the technical side of it does play less of a role in terms of how we choose the individual coins. But it is important because those market dynamics, they serve as levels of support. If someone has come in at a certain price, then they don't want to go out below that price. And so we definitely see that kind of movement. And it does bear a part when we are actually rebalancing our basket and we have to now trade some of the tokens. So our trader takes that into account to make sure that we get in at good prices. But our main focus, Alec, is in fact on fundamentals. And the fundamental technology has just been proving itself more and more. Even with all the recent fallout, what you saw some firms, some hedge funds, etc., that were trading crypto. You saw them going bust, but the actual protocols on the blockchain, they kept on running perfectly smoothly, no problems at all. And in fact, some of these hedge funds, they borrowed money from these protocols as well as from other people in the real world. And what we saw is that they repaid the protocols 100%. The protocols took no haircut. And so within the space, we're seeing this as proving out the fundamentals, proving out the thesis that this is the technology of the future, because DeFi, or decentralized finance as we call it, came out totally unscathed in this entire process.
There was a piece in the FT, Financial Times of London, our partners in the UK yesterday, which unpacked a number of investments that had been done by big institutions. Aberdeen, which is one of the biggest asset management companies, and they're not necessarily buying coins, but they're buying into the same kind of area that your basket focuses on. In other words, the guys who provide the pick and shovels in many regards. The exchanges, the Schroders made a big investment. BlackRock, who've actually put together an ETF for institutional investment. That surely is a very good sign, Jonty.
Alec, it's a huge sign, and it's a point that I was hoping to make a bit later on, is that all these big institutions are gearing up for regulations, because ultimately when regulations come in, the floodgates open up, because your large banking sectors, your large financial institutions can now make, in a very short period of time, this asset class available to billions of people. And if you just look at the recent developments in South Africa, the ex head of banking for HSBC has joined Binance. Binance is the largest exchange by trading volumes per day, and he's heading up the SA division of the business. And ultimately, one would assume, being ex-head of banking at HSBC, he understands this space, and he's in discussions, or will be in discussions, with the FNBs, the standard banks in South Africa, to on-ramp them onto Binance. And that's what we believe is really the biggest investment opportunity in this space. Is if you invest pre-regulations, and obviously there are risks associated with that, and we've seen huge issues globally with cryptos because it's unregulated. We're seeing non-decentralized investment opportunities completely crashing. But there are the upsides, and the upside is, if you're an investor and you're investing pre-regulations, it means you're investing before the late adopters. And that is where the huge opportunity lies. So as a business, our view was we entered this market before any of the large players, because effectively we want to establish ourselves as crypto fund managers. And ultimately, when regulations do come in South Africa, they're coming in next year. The SARB made an announcement a couple of months ago, and that's when we see that South Africans are really going to get behind cryptocurrency investing, because ultimately they have the safety net of the FSCA being the SA regulator.
One of the purposes of doing this webinar is to educate, and I think the education, certainly from the feedback in the media, when crypto or digital assets were falling so sharply, needs to be accelerated. And I say this because some of the commentators were just outrageous in their comments, saying that, well, this has always been a farce, it's always been fraud, it's there's nothing to it, it's vaporware, etc. I mean, Gaurav, I'm sure you get this feedback on a regular basis from people, not necessarily, obviously not your clients because they've done their homework, but just generally in the marketplace. How do you respond to it?
Well, Alec, I mean, I enjoy the skepticism, and I'm always open to it. And I think through it, because you need to be open-minded. However, I often draw parallels with the advent of the internet in the 90s and the growing adoption of the internet. And back then, there were a lot of skeptics about the internet. And at the same time, there was, with the dot-com boom, and then it was a bubble and it burst, we saw hundreds of companies come up. And a lot of those companies were indeed scams, or they were based on nothing. And the cliche prototypical example is Pet Rock, where they would sell rocks online. And it had apparently a crazy valuation. So in this space too, you see tokens associated with projects, and some of them are based on nothing. And some of them are also indeed scams, where the person sets up a project just to steal everything. But just like there were valuable nuggets back then, there was Amazon and Google, etc. There are indeed great tokens, great projects. They have teams that have proven themselves. There's real utility there. And so what's important is to actually diligence and do research and understand these tokens, and then to pick those based on that. So if you look at the slide in front of you, there's that pink token with the unicorn on it, and it has quite a playful image of a unicorn, but that's the token of a project called Uniswap, and that is effectively a stock exchange that's running on the blockchain. You can swap one token for any other token on there. And Uniswap often does more volume than Coinbase, which is an exchange that's listed on the NASDAQ. But Uniswap has no staff. There are some people that made the program, but now it just runs on the blockchain, no human involvement. So that's an example of a real use case. It runs 24/7, never closes, never fails, and there's no staff members behind it. So there are gems like that within the space, but of course, it involves research. The problem is that a lot of people, they saw the absolute meteoric rise of crypto, and they had FOMO. And they came in trying to get rich quick. When they saw someone 100 times their money, they think, I want to do that too. And they just bought any token that was trending. Now that is a recipe for disaster. So when the skeptics come to me, I actually talk to them about this, about, it takes time for technology to be adopted. And sometimes there's a bit of froth in all of that happening. And then of course, there's a bit of pain.
Good stuff. All right, I've been very slow with the presentation, so let's not do that any further. Just maybe, Jonty, can you tell me? Next slide.
Yep, yeah, please. And Alec, if I could just add to what Gaurav was saying, and to your question, really, and I call a lot of these market commentators really spectators, not speculators, spectators, and they're sitting back and they're watching the market. Really, what they're watching is the volatility, and it's the volatility that scares them. For a fund manager to offer this to his investor base with such volatility, or for a financial advisor, obviously, in the short term, would create concern. But this volatility has really blinded them from what's actually happening in the market, what developments and activities are happening. And if you do your due diligence and really start understanding what's happening behind the scenes, forgetting about the price, that's where the excitement is, and that's where the investment case is really quickly developed. And this is what this slide illustrates. So if you, on the left-hand side, where you see the on-chain revenue, so Ethereum, which is the biggest blockchain network, over an 180-day period, had revenue of $2.7 billion. Now, this is users transacting with the network, paying fees, they're called gas fees, of a tune of 2.7 billion over a 180-day period. Now, if you look at the graph in the middle of the screen, it's almost not visible, but what that is showing you is the number of trades that are occurring over a year. And the last blue line illustrates that during the last month, 40 million trades or transactions occurred on the Ethereum network. That's over 1 million a day, and that's where this revenue is being generated. Other marketplaces like LooksRare, OpenSea, which are marketplaces, in this ecosystem, that revenue, you can see LooksRare had revenue during a 180-day period of $506 million. Now, these are massive, massive numbers, and I can almost guarantee you most of the listeners or viewers, they wouldn't have seen these numbers. They would be unaware of it. And we are seeing businesses, many, many businesses, name brands like Home Depot, AT&T, Microsoft, Cheap Air, and many others that are now allowing customers to interact with their services by paying with crypto. And then the last point is, if you look at Bitcoin alone, there are already 1 million addresses of people, some might have more than one address, who are transacting with Bitcoin. So the adoption rate in this industry is really, really through the roof. And if you pop over to the next slide.
Sorry, a billion addresses, did you say?
1 billion.
1 billion addresses. Wow.
Yeah.
Okay, here's the next slide.
Gaurav, I don't know if you want to talk to the adoption curve in this space.
Yeah, sure. But I just want to make one other point, is that if Ethereum was valued like a tech company and it had annual revenue, annualized number of $5.4 billion, growing at the rate it was growing at, you can just imagine the tech valuation, right? The size of the network, all its applications, etc. And so when you consider this, by some measures, it's quite undervalued. If this was to be valued as a tech company, it would be at a multiple of its current market cap. But that aside, what's quite nice about this, and it kind of supports that picture, is this here shows the adoption rate of various technologies. And it starts at 0% at the bottom, and it kind of makes its way up to 100%. And we have many technologies that in the last 100 years that we now take as just necessities in our world. And what's interesting is that as time has gone on, the adoption rate gets faster and faster, and the slope of the adoption rate gets steeper. And what's not on here, it's off the chart, is the adoption rate of crypto, and it's very, very steep. And of course that makes sense, because none of these technologies, including the internet, had the internet to spread it. And so with the internet allowing the penetration of crypto technology. In fact, it runs on the internet. It is spreading way faster than any of these previous technologies. The adoption rate is much higher. What's also the case is with the advent of most of these technologies, there wasn't a venture capital ecosystem that grew around the internet and the tech startups of the 80s and 90s, etc. And now they've seen this story before. There's a lot of expertise, and that venture capital ecosystem is now supporting the crypto technology development. And so what we are expecting to see and have seen is just the rate of adoption being much faster, the rate of growth being much faster, and getting to a point where this technology is penetrated throughout society much quicker.
Just to explain this so that I understand it, help me out here. The telephone, starting in 1900, took 60 years to get to 80% of US households. The electricity took probably 40 years. It looks like it started around 1905 to get to 80%. Is that what we're seeing here?
That's exactly right. You're reading the graph perfectly.
And so how deeply penetrated has crypto been in US households? You said the graph isn't here, but presumably that's been a heck of a lot faster than 60 or 45 years, or even there with a cell phone, which seems to have taken what, about 15 years.
That's right. So the crypto penetration rate has been variously reported, but there's some numbers that say as high as 25% of Americans have purchased crypto in some form or another, and that is in the space of 10 years.
Mm-hmm. Okay. All right. Well, that gives us an understanding of that graph. How about this one?
Yeah, so from a regulatory perspective, we discussed it a bit earlier, is that the world is really globally gearing up for regulations. There's, I mentioned in South Africa, next year we'll have regulations. The EU are on the forefront of regulations. America are looking at it, and many developed countries. And to the point I raised earlier, this really gears up the institutions who are already, as you mentioned, Alec, investing in this space, whether it be into exchanges or various forms of on-ramps or investment funds like BlackRock have created, because they're ultimately gearing up to try and capture the largest portion of the market that they can. And that, from an investor's perspective, should really start ringing in their ears, because if these institutions can't enter the space because of regulations, and clearly are gearing up to do so, from an investor's perspective, timing, potentially could never be better. And myself, Gaurav, and my other partner, we really believe in this space. We personally heavily invested in this space, and we think that this is where significant returns will be generated, albeit much higher risk than most other asset classes. And investors shouldn't be putting their bonds into crypto, but we do think that it's a significant opportunity for investors. But the key is when to invest, and I personally think that pre-regulations in the right environment, managed correctly, will lead to really significant returns for investors. But it's we'll have to see when these regulations do come in.
I'm reading such a good book. I know it's taken me a little while because I kind of dip back into it from time to time, but it's called Engines That Move Markets. It's a phenomenal book because it goes through the innovations over the past 200 years that have had a big impact on things that have changed, like the railroads, telegraph, the internet, and so on. One of the points that's made there is it's very easy to pick losers when a new innovation comes along. Imagine, for instance, the motor cars. You knew that the guys who were making the buggies, or the people who were breeding horses, they were going to be losers when motor cars eventually got to critical mass. But it's not that easy to pick winners. Now, is this the thinking behind your basket? I.e., you've got quite a nice spread there, and I think it's an important point to dwell on. Why are you putting a basket together? We talk about the Jaltech basket every day, and it isn't 100% Bitcoin. It's got other asset classes. Why are you handling it that way? Is that a little bit of supporting the notion that finding the absolute winner is not going to be that easy. So you need to spread.
Yeah. So again, I'll go back to my analogy, Alec, of the internet. And if you were sitting in the 90s and you could see the promise of this technology and you believed in it, however, you chose to invest in Alta Vista and Yahoo and MySpace, that would have been, you'd be very unhappy right now. It's difficult to pick the winners, right? And with your motor car example, I've heard before that there were something like 200 motor car companies at the turn of the 20th century, but in the US, but only 4 that ended up making it. And so how do you pick the winners? And one approach which has worked quite well is an index approach or a basket. It's where you actually try and own a broad section of the market. You pick the biggest companies in the market and you buy them roughly in their market capitalization. And then as they start to, if they start to lose, you keep rebalancing down, 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 and eventually they're out of your index. When a company that's not part of your index starts to gain and it's proving its worth and more people are investing into it, you rebalance into it and up, up, up. And while this doesn't mean that you get Amazon on day one, it does mean that you capture Amazon still very early in its life. And you get to enjoy a great deal of the spectacular growth that it's done. And so we've tried to, of course, replicate that with the basket. However, if you consider the 2 biggest coins, Bitcoin and Ether, they would just dominate the entire thing. They'd be 90% of the basket. And so we have introduced a maximum weighting just to diversify the investors and for them to get a bit more exposure to the newer technologies. By default, the type of investor that's in this space and buying this product, they do want exposure to new technologies. So they don't just want to be 90% in Bitcoin and Ether. And so that is the rationale behind the basket. And all the time we meet and we discuss the constituents of the basket. We discuss potential tokens that we've been keeping our eye on sometimes for over a year, looking at how it's been performing, have there been any security issues, any hacks, etc., the team behind it, before we say, now it's time to actually add this into the basket. Its market cap has grown, it's proven itself, but that doesn't mean it still doesn't have a long way to go in terms of growth. We're still here, it's very early days in this space, and the promise of blockchain is that it's going to replace the entire financial system. If it does that, the basket still has a long way to go. Yes, we didn't pick it on day one because we wanted it to prove itself, but there's still lots of growth to be had.
Yeah, I guess a little bit like my industry, where when I had an internet company that we listed in 1999, there were 12 internet listings. 11 of them went bankrupt or disappeared. I don't know if they all went bankrupt, but they certainly were delisted within a few years. And our company, unfortunately, didn't live up to its potential. But I think that there were very good reasons why that happened because of the unique South African situation. So finding a winner, wow, to pick 1 out of 12 was very difficult. But I guess if you'd looked internationally and you'd picked 12 companies that were on the internet back then, you would have had your failures, but you certainly would have had some very, very big winners that have gone up multiple times. So it's a sound approach, and I don't think anybody who knows about investing would criticize the basket approach. Jonty, take us through this one.
Yeah. So, Alec, if one of the negatives around the cryptocurrency market is the amount that investors have lost, not through prices or price volatility, but through hacks. Through hacks of exchanges, through personal phishing attempts, etc. And as a result, I think in July alone, billions of rands were stolen from various exchanges, and it's not a once-off incident. It's now becoming a regular occurrence, and it makes sense because for a hacker to successfully hack an exchange, which centrally holds billions of rands in crypto, if you break into that vault, you can run away with a lot of money, and that's what's been happening. So, as a business, we're very conscious of this concern for investors. So we've partnered up with one of the world's largest tech providers in the custody or safe security of crypto space, a company called Fireblocks, and we partnered with them, and we've created a digital vault where investors who are sitting on cryptocurrencies can transfer their money into a digital vault, extremely safely secured, and most importantly, they don't need to trust us that we're not going to run away with their cryptos, because there are independent parties in place who will verify the withdrawals of certain transactions if the customer wants that service. So, you know, we've seen the need for it in the market. In the SM market, it's globally, it's a big industry, and we think it's prudent for investors who are, you know, holding a significant amount of cryptos to consider an alternative to holding their cryptocurrency on an exchange, which we think is high risk. The second product that we will be launching soon is a blockchain basket. So what we've heard from your community is there are a number of people who are saying, you know, Bitcoin, they don't believe in it for whatever reason. It's a Ponzi scheme. It's not a store of value, whatever their reasoning is. But blockchain, they believe in, and the technology behind it, they see how it's going to disrupt the financial sector. So as a business, we've heard their cries, and we will be launching a blockchain technology basket, which will incorporate a number of leading blockchain cryptocurrencies and tokens. And that'll give investors a very unique and specific focus in that sector of the market. So that's what's really on our agenda as a business that we're focusing on at the moment. And you know, we think it's obviously two really good opportunities for investors who have and are looking for exposure in this space.
So once again, it's that diversification approach to a bit like venture capital, I suppose, in a way. Here is a brand new area. There are many players. It's very hard, very tough to pick one winner. So spread your bets.
Yeah, I wouldn't say it's venture capital per se. You know, if you look at the revenues of ETH, which will be in the basket, you know, that's 2.7 billion in the last 180 days. And there are others which aren't nearly on the same, you know, achieving the same revenue numbers, but they're in, you know, the hundreds of millions, of, if not tens of millions of dollars over the 180-day period. So they're significant players, but the technology itself is very much in its infancy stage, and therein lies the opportunity from an investor's perspective.
Maybe just to elaborate, venture capital investors tell us that they will take, of every 10 bets, they will expect 1 or 2 to be superb performers, or just shooting the lights out. And then they'd have a couple more that would be okay. And then they know that the majority of the bets they're taking, they don't do it deliberately to lose money, but the majority, because of the way that things develop, are unlikely to do that well. But that's more than offset by the big wins. So that was really the context of it. But I can see that you're hoping you get 10 out of 10. And obviously, those of us who invest with you are hoping that you do that as well. We rely on the expertise of the gurus. And I haven't seen any tough questions. In fact, I haven't seen any questions come through yet. I know we've got dozens of people on the webinar, so doing it live now. So please go onto your control panel. You see a question mark, click on that and pose your question. We will be sure to retain your anonymity. It's a rare opportunity to have a chat with our experts, our gurus who are here. So please, please use that opportunity if you would. Guys, maybe while we're waiting for the questions to come through, you can give us some insight into where you think that the crypto market's going to be going in the next year, 18 months, even 3 to 5 years, because we do say to our community members, don't invest in anything if you're not prepared to tie up your money for 3 to 5 years. I remember at the last BizNews conference, Stafford Marcy, who's going to be back at BNC4 at the end of the month, was saying very clearly that everything is lining up, but there's going to be a lot of volatility. So if you're going to make an investment, please don't expect that you can double your money quickly. It might even halve in the short term, but over the long term, you do fine. Gaurav, do you want to kick off with that question and just give us your insights?
Sure. I'll also just link that question to the blockchain basket, Alec. So one of the rationale behind the blockchain basket and where we also kind of see the market going, is because it's a new technology, people don't know if the future is going to be multiple chains. And when you are doing your gaming, you're interacting with one chain. When you're dealing with NFTs, another chain, or if everything's just going to happen on one chain. And so this multi-chain or single chain future, because we don't know what it's like, the blockchain basket actually provides you exposure to all of that. It provides you exposure to a multiple number of chains. It provides you exposure to some chains that have only one use, which are called app-specific chains. And it provides you exposure to some chains that just help other chains run. They just provide a bit of scale for them. And so that way you've got quite a diversified bet on what the future of blockchains looks like. In terms of what the future looks like, right now I think there's a saying, I'm probably going to butcher it, that you never bet against the Fed. And right now we're all in the hands of what the Federal Reserve does. And it's quite conversely, when the data comes in bad, the markets go up because everyone expects the Fed to take it easy on us. But that being said, there's a big event happening in the world of blockchain, which is that the Ethereum chain, which is the biggest blockchain, the second biggest by market cap, it's changing the way it works. It used to work on mining, which is how most blockchains work, and it's changing into something else called proof of stake, which is much more environmentally friendly. It's 99.95% more environmentally friendly. And as the news of this event, when it does the changeover, has been starting to filter out, you'll have seen the Ethereum price in the last month or two has been growing faster than most of the other cryptocurrencies. And the other cryptocurrencies are rallying in sympathy or in correlation with it. So we think that's a big event that's going to shape the markets in conjunction with what the Fed does. But like you've been saying, Alec, it is the case. I tell all of our clients when they ask me about it, I tell them, when you put the money in, then just forget about it. Don't look at the price every day. I have to because it's my job, but it could halve the next day, and that's going to cause you a lot of stress. But in the long run, it's more than likely to do a multiple. As this technology proves itself out, as it penetrates society, it's very, very useful technology. And as humans, every time we discover a useful technology, we don't just leave it aside. And so it's almost guaranteed that it's just going to penetrate society more and more. And we're going to use this technology more. But what the road is between now and there is going to be quite a bumpy one, as people speculate, etc. And so, yes, it is that part of the portfolio that you're not going to touch for 3 to 5 years.
Jonty?
Yeah, I'll use my own cliche, is the trend is your friend. And the trend of crypto for the last 10 years has been an upward trajectory. And I think that's where it'll continue to go. If the crypto market was the only market down, I'd be worried, but they're not. All markets are down at the moment. So I think it'll continue to go up. And what excites me is the adoption curve. Regardless of price, transactions are continuing at a rapid rate. Bitcoin addresses are opening up, and more people are interacting with this space. And I think it'll just continue to grow. And to mention it for the third time, is the catalyst for huge growth is going to be regulations. And I think that's where we're going to just see huge numbers in terms of growth. So that's what we're all waiting for, and we're expecting this in the next year.
So between now and our next webinar, in a month or so's time, what are the flags we need to watch out for?
So this event where Ethereum changes how it works is expected to happen sometime around the 15th or 16th of September. So if that happens first, then that should result in a rally of crypto. Of course, subject to what the Fed does. So that's the next major event that's coming up. And following that, there are various price supports. So Ethereum just crossed $2,000 a couple of days ago again, which was seen as a very bullish sign for the whole market. And so there should be a support that develops there at the $2,000 mark. It's now currently below that. But if everything goes according to plan, there should be something developing there.
And the adoption rates, to close off with, Jonty, are we seeing those continuing to rise as strongly as has happened in the past few years?
We are indeed. Obviously, price has an impact on it. So, when markets are really down, your adoption curve slows down. And what we've seen, as in Ethereum, as another example, its revenue has dropped as a consequence, I would imagine, of price volatility. But in general, adoption really should only go up.
Stuart, just help me out here. I'm not seeing any questions, which suggests that our gurus have managed to answer every question that is in the audience's mind. Is there perhaps something, is it a user error on my side?
I'm not sure if you use your tech, Alex, but there is a couple of questions. I've got one from a fellow investor. Do you want me to just throw them out here, or?
Yeah, please. They're not coming up on my screen, so please, would you pose them?
No problem. Just this one's from fellow investor. It says, what is your take on the idea to make fixed property into fractional ownership through tokenizing it and raising capital in that manner?
Yeah, so that is a very interesting use case. It's one that's been talked about a lot. It's also the core of the idea is actually to also just tokenize the entire property as an NFT. So the title deed becomes an NFT. And then you can then have sub-tokens to fractionalize it, which then would involve a fractional ownership in that property. The main hindrance is, in fact, linking it to our current legal systems. And the legal framework doesn't yet exist. There are some really progressive markets like Estonia where they are exploring this, how to bring real world property onto the blockchain. So what we need is we actually need our legal framework to catch up, and for the registrar's office, etc., to have that level of technology. But it's a very exciting use case. And one of the primary reasons it's exciting as compared to, let's say, having a company that owns a property and then shares to fractionalize it, is that the blockchain is totally transparent. So what you could see is you could have all the revenue earned by this property happening on the blockchain. And the reporting would then be in real time for investors. So at any time you want, you could, if you owned a token, you could go check the blockchain and there would be a nice dashboard for you to look at, which would show the rent accruing in real time, exactly how much that token is worth. And what's nice is that it would also give you access to liquidity. If you want to sell the token, the markets are very, very liquid. On the other hand, if you just want to borrow some money, you still believe in this property, but you want some liquidity, you could use one of these protocols, these decentralized finance protocols we talked about, where you deposit your token in, and you could borrow another token like a stable coin, for example, which are these tokens that aren't volatile in price. And so you could end up keeping ownership, but still accessing liquidity. And that's what the blockchain would make available.
Thanks, Gaurav. Just a question from Tracy. She says, I see a 20% performance fee on the fund fact sheet for the Jaltech Basket. Can you please justify this?
Yeah, so well, firstly, the performance fee only kicks in over a hurdle. So, and the hurdle is effectively 10% per year. And the justification is around the team. So what you want as an investor is the strongest team in the market managing a basket and selecting the best cryptos for the basket. And the incentive there is you want to incentivize the fund manager to pick winners and generate the highest return. So the performance fee of 20% above a hurdle of effectively 10% per year is to incentivize the fund manager to manage the basket correctly, to rebalance if necessary. There's no rebalancing fee. So to rebalance if necessary and to pick winners. Unfortunately, in the fund management space, if you don't pay the fund manager, well, ultimately you're going to have a weak team and you're not going to get the returns you want. So there's a carrot there for the fund manager to perform.
Yeah, Jonty, I would add that
Thanks,
if the market drops, that until it comes back up and crosses the point where you came in, there's no performance fees. So it maintains that for investors.
Thanks, Gaurav. Debbie just wants to know, it's on regulation. Says, how is regulation not a direct combatant of decentralization? I understand a fundamental principle of decentralization to be lack of control, obviously non-centralized. Are banks not currently centralized? Would they not want to centralize blockchain to take their cut, so to speak? Does crypto not stand to admit all the large financial players when it comes to personal banking? So I'm not sure if it was a bit long, but yeah, who wants to grab that one?
That's a fantastic question. So yeah, so in fact, that is some of the fear of regulators and of some of the current institutions, is that these, by their very nature, blockchains are uncontrollable. Today, if all the governments in the world agreed that they don't want Bitcoin to be anonymous anymore, everyone needs to figure themselves, they can't stop it, because the Bitcoin blockchain is just going to run. Even me right now, I could just start running the program on my computer and keep it running, and no one would even know that I'm doing that. So that is the nature of a decentralized system. The common sense approach has seemed to be that the regulators will regulate as people come in and out of the blockchain. They need to interact with the real world. So for example, they'll go onto a crypto exchange, they'll take money from their bank account, transfer it to the crypto exchange, and the crypto exchange will then figure them. They can then buy tokens, and once they bought the tokens and start interacting with the blockchain, it becomes very difficult to regulate them. That being said, there's a program called Tornado Cash that runs on the blockchain. It's decentralized, no one can control it. And what it does is it anonymizes you. So if someone knew what your blockchain wallet address was and you put it into Tornado Cash, you get back your tokens and no one knows who it is. So there was some fear by regulators that North Korea was using this service. So just last week, the US government sanctioned Tornado Cash. And no one can stop it. The program just still keeps running. However, what does happen is that now, if anyone uses it, then they become sanctioned. So this is probably the way regulators will react. But that being said, the regulations coming out of the US, out of the UK, even in discussions in South Africa, they're not viewing the whole space as something to be stopped. They understand the innovation and the advances that this is all unlocking. So what we'll probably see is we'll see more examples of this, tools that are very specific to potentially being abused, like Tornado Cash, being sanctioned, and the government saying if you use that, we'll sanction you. However, letting the space as a whole continue to advance and just regulating the on-ramp and off-ramp as you come in and out of the space.
Thanks, Gaurav. Any comment your side, Jonty, on deregulation and regulation?
No, I think regulating the on-ramp, so when people come on in terms of FICA and anti-money laundering, is critical. I don't think that crypto should be used as a means to fund terrorism or for people to launder money and avoid taxes. If that was going to be allowed, well, then every single country in the world would ban crypto. So I think regulations to a limit is important for its longevity and sustainability.
Thanks, Bert. Alec, I'm not sure if you're still on. I'm out of questions my side.
No, I'm very much on and listening and fascinated by everything that's going on. But just to thank you very much, Stu, for coming in there. I'm not sure if it's user error or if it is just a question that that my control panel has got something little strange with it today that I'm not seeing the question. But thanks. That's why we always have a redundancy plan here at BizNews. Guys, just to close off with, perhaps, final words, Gaurav, in summary of what we've discussed today. It seems to me as though the message is quite a clear one, that this is a long-term investment, that the underlying asset base is growing, i.e. the whole blockchain story, and that don't panic when you see volatility.
Exactly, Alec. I mean, just a few months ago when prices were very high, the number of clients that came to me and said to me they wished they'd gotten earlier. They wish they could get in at previous prices. And now this is the opportunity. But it takes a lot of conviction to come in now at these prices. But that being said, the fundamentals haven't changed. The fundamentals are really strong. They keep proving themselves. And so for me, this is a buying opportunity. It's an opportunity to get into the prices I wish I could have gotten at, and build up my portfolio. And then, yes, then to try and forget about it and to only check it very infrequently.
Jonty, your final word?
Yeah, as biased as the statement is, you need to get into the market to really start appreciating and start getting interested in it. And I think for a lot of investors, that's what you need to do. Dip your toe into the water, and then all of a sudden there'll be a crypto article and you'll be interested to read about it. And then as soon as you start going down this rabbit hole, it's never ending, and the opportunities start making sense, and you start understanding this space. I think that's what investors need, is that little push just to get in and then experience what's actually going on in this ecosystem. As complicated as it is, but I think for most people, they'll start to understand what's going on.
First step of a journey might be very small, but eventually you do learn and add to your knowledge base. And I think that's in any journey, and this is a new one, this is a new area that we're all going to be very, very affected by into the future. So best to start learning now. Jonty Sachs, Gaurav Nair, as always, thank you for your expert opinions. Thanks to the BizNews community members for joining us. I'm Alec Hogg from biznews.com. Until the next time, cheerio.